Good morning, traders. It's Bear. Welcome to StartUpTrading.com. It is 4 minutes till 9 a.m. Eastern Time on Friday, November 8th. So looking at yesterday's session, right, the March higher continued for the ES and the NASDAQ, while the Dow and the Russell took a little bit of a break, but volume was still overlapping to higher for both of those from the previous day. But really no general traction in those, right? You're unchanged on the Dow. You're, down 0.4% for the Russell. Looking at the mark over mark, but again, profile wise, we just watch where the big blob is, and are the bars, equal or higher or in the middle of it, right? It would give two shits less where the settlement is. And then as you look at the ES, right, and the Nasdaq, just you know, completely different. It was really the Nasdaq that was, driving the action. You can tell by looking in below that that was definitely the stronger market, pretty much holding that Superman pose once again today. So second day in a row. Yesterday, where you're holding that +1 to +2 standard deviation move up the whole day. If we look at what that did to structure, what we ended up getting was excess and A lines on both of the strong indexes, the Nasdaq and the ES, and we also have a quasi split distribution here dotted out for both of those as well. Looking at the news for the day, really nothing on the table. We're going to have University of Michigan at 10 o'clock, but we usually have volatility around 10 o'clock anyways. And then we're going to have Bowman, conversation on banking topics. Woohoo! I don't think that's going to be a market mover. There is another Fed head giving opening remarks later today. It wasn't even worth noting. And then as far as earnings go, nothing to, really swing yourself on there either. Keep in mind that markets are in an overbought condition, right? So it doesn't mean that we can't stay there. And between the years 1997 and the March of 2000, there were periods where we'd stay overbought for 5 months at a time. So don't think that this is our basically our second day here of being overbought. It doesn't mean that we're just going to roll back over, but it is just something to be aware of that you're at the top end. If you look at where we're at right now in positioning, uh, the Qs closed yesterday at 513.50. We are down basically $1, which would make it, down a little over, 40 points because of the offset between the 4 o'clock close and the 4:15 settlement. Basically, we're down 60 points right now in the NQ. But looking at where we're at, we're currently trading 512.50 even right now. So we are halfway between, right? 1250 would be halfway between 510 and 515, which are the big near-term markers. Obviously, this would be a 200-point range between these markets. 205, 206 maybe, and then so potentially down 100, up 200, or up 100, down 200. That is definitely on the table today. Looking at the SPY in the same way, uh, and the title of my video is SPX 6K and SPY 600, because that should be your positioning resistance, right? Jack pointed out yesterday, we're at all-time highs. There's really nothing on the books, right, that is uh, resistance because we haven't traded here yet. But as far as market makers and positioning, 600 would be that lid, and that would be a reason to pause there if you do get up there. We're currently trading 595.58, so it would be 45 points higher than we're currently trading on the ES. The ES is down 5 points, so that would be basically up 40 points from yesterday's settlement is where you would be looking for around those markers. You can check your local listings as it trades, uh, but looking at right around that 6,040 to 6,045 area would be your upper limit more than likely for today. On the lower limit, right? you could potentially retrace, SPY wise down to 580. That would be a huge drop from where that'd be a 150-point drop. Uh, don't think it's not possible. It's probably unlikely, but this would be the reason that you would go down there is just because of all these positions down there and all these in between that the market maker could get a refund on. Looking at the cash, again, that 6K. And you can see there's a little bit at 6,005 also. And then, going back down lower, you can see you don't really get any buffering again or major support until you hit 59.40 to 59.50. Uh, the cash market closed at 59.73 yesterday. Again, we're down 6 points, so that would make it around 59.67 is where we're currently trading. So we're closer to getting a test of the 59.50 to 59.40 area. We'll see if that ends up being a floor. You can see for next week on the books, and there'll be positions bought today that'll change this before we see it again Monday. But looking at next week, you can see that 5,900 is your major pin, so that would be 70. 3 points lower than we closed yesterday, or 66 points down, basically 67 points down from where we're currently trading. That would put us right around that 59, 35 to 40 range, right in there. So I think we beat up positioning good enough. As we get into the indexes, we have just been smoking up higher, right? If we turn off the extended session, and this is what I really like to look at for a move. And you can see as we sit here and look, I'm going to actually draw this out so you get a better picture of what I'm trying to articulate here. But I'll just leave it green. But you can see this consolidation zone that we are in right here. That's clearly a consolidation. You can see this consolidation, right in here. This matched over here. But as that news come out, right, we got that end around and jump. So don't think that there weren't a lot of people that were short here. And even though we went down here, went back up, they still felt pretty good about their positions, right? And then now we have leapfrogged over them. This is, extremely bullish positioning. Uh, and then, so basically, the first 2 days, of my opinion, of this leapfrog, which was uh, Wednesday and Thursday, were all just a short squeeze, right? Now you have to see if there's any true buyers up here, uh, because all these people as we opened up here, they just had to exit and get out, and this was max pain for them. So now we'll have to see if there's anyone. So what? Keep in mind that you got a lot of people that are still down in here, a lot of trades that were down here short. So each of these pullbacks, it should take a while. You get a little bit of a pullback, uh, and then as soon as you start, and this is how you can tell how many people are still trapped here. When you get a pullback, when it starts to turn back up, you know, how secure is that swing low that you put in, right? You should not be one time framing lower uh, on any serious time frame for very long before it gets, once it gets reversed, that short series one time framing down, whether it's 5 minutes, 15 minutes, 30 minutes, 1 hour, you should not see that, it should last for, at least twice as long as it was going down. So what I'll be watching today is the point of control is as we turn back on the extended session so we can see this a little bit better. Uh, basically let's call it 59.95 is the point of control from yesterday. We're only about 3 points off of that right now. And then on some weakness, potentially you could get back down to this 59.57, and I think you'd have a hard time. And this actually traded yesterday, so we could remove that from the board. Uh, so we'll go ahead and do that now. But still, that should still be where the bids come from, because I don't think you're going to be able to take out yesterday's bell low. Today, I think that would be an unlikely scenario. If it does, it would. We'll just have to see what the tape looks like when we get there. Expect that not to be an option for today. Uh, Looking at the previous breakout high, right, and this goes back to July 11th on this Z24 contract. The high was uh, 635, let's call it. So that was still your, I'm sorry, it was 237. Let me rephrase that. 21 238. Let's call it 21 238 is where that high was. So basically, all we've done right now is swept over it, and we'll have to just see if we can, get back up there or not. You can see that the ES is firmly above, right? So the first day above that level is a look, right? So then you either get the look and go, or the look and hold, right, which we won't talk about too much, or the look and fail. So the NQ is more set up to potentially look and fail, and we'll just have to see where that leads. But as it fail, if the NQ does get that fail and starts retracing some of yesterday's price action, don't think that yes, we can get below yesterday's low because of what I just talked about, all those people being trapped. But we can potentially start moving down on both for yesterday, and pay attention to uh, basically Wednesday's bell high of the day, as you're probably gonna just miss it and not be able to touch that. Would be your max downside probably as far as just profile looks go. Again, we're trading 6K on the futures right now. If we look at the overnight session, basically 20 points have traded in the overnight session as far as range. Um, Looking at the indexes, you can see the Russell's a little bit weaker overnight. We'll see if that bodes well for it getting a little bit of a bid after the bell rings. See if we can get back into value and get a potential 80% rule if it does ring in there. So your 80% rule would take you up to 2405.30, and I would just probably cut that off at 2403 is all I would look for. You can see that the overnight high right now is 2402.6, so about four ticks over that. I think you know if you on your first run, that's your green line probably. If we look at those split distributions I was telling you about, and this is what I'll be watching today, I'll just be watching the zone for the Nasdaq between 21,204 half is where I drew it, and then down at the bottom you got this 21,000. Let's just call it 86 half. So those two levels right there. So in between it, a little bit of chop, and you can also see that's basically lines up with the value area zone. So you'll be chopping in value. Getting above or below there is going to be more significant. What I'd really like to see is just to tap this liquidity down here where the people are trapped, and then I'd like to see what happens as we start rising after hitting under it. So I would like to see this line taken out for at least 15-20 minutes, and then to see what happens as a response after that. It doesn't mean we're going to get what I want to see today either. Those lines for the ES are 6001 and 59.85 half is what we're looking at. So same play there as well. I hope this helps. I hope you guys have a great weekend, and we will talk to you on